All right, let's jump right into a question that honestly messes with almost every investor's head. When your investments pay you cash, are you actually getting any richer?
I mean, think about it. That money that hits your account from your investments, is that real profit? Or are you just, getting your own cash back? That's the big mystery we're cracking today. And just so you know, everything we're talking about is based on a deep dive analysis from April 17th, 2026. It really gets into the nitty-gritty of the economics, the accounting, and yeah, even the psychology of it all. So, let's do this.
Okay, first things first. To get to the bottom of this, we need to be crystal clear on what we're even talking about. What are these payments we keep getting?
We're talking about proventos. Now, that's just a broad term for any kind of cash your asset pays you without you having to sell a piece of it. Stuff like stock dividends, interest from a bond, or the income you get from a real estate fund.
But here's where it gets really interesting. Not all these payouts are the same.
Nope.
Depending on the asset, the payment gets a different name, and this is super important. It gets treated very differently.
Just take a look at this table. It lays it all out using Brazil's 2026 tax code as an example. You can see right away how a stock dividend or a payout from a real estate fund might be tax-free, right? But the cash you get from a government bond, bam, taxed right away. This difference is a huge piece of the puzzle.
All right, let's get to the heart of it, the main event. What actually happens to the price of your investment when it spits out one of these cash payments? This is like the mechanical truth behind this whole thing.
Okay, let's just walk through a super simple step-by-step example. Let's say you own one share of company X.
And on Tuesday, that single share is worth exactly 25 rays.
Then, boom, the company announces they're paying a dividend. For every single share, you're going to get
$1.50 in cash. Now, that feels awesome, right? It feels like free money just landing in your lap. But, and this is a big but,
the very next day, they call it the X date, the market does something automatically. See, that money isn't in the company's bank account anymore. It's on its way to you. So the theoretical price of the stock has to adjust.
and it drops to exactly 23 reais and 50 centavos. It's not magic, it's just math. 25 minus the 150 that's now heading to your pocket.
So here it is, the big reveal. Your total wealth hasn't changed at all, not by a single centavo. A second ago, you had a $25 stock. Now, you have a $23.50 stock plus $1.50 in cash. See? No new wealth was created. It was just moved around, redistributed from the stock's price to your cash balance.
So if it's just moving money from one pocket to another, why does getting a dividend feel so good? Why does it feel like we've actually made money? Well, this is where our own brains start to trick us. Let's talk about the psychology. There's this amazing concept called the money illusion. Basically, our brains get a little hit of satisfaction when we see actual cash land in our account. It just feels real, so much more tangible than watching a stock price slowly creep up. Even if our total net worth is exactly the same, that cash in hand feels like a win.
And that illusion can lead us to make a really big mistake. We start confusing real, honest-to-goodness profit with just getting our own money back. Look, true economic income is brand new wealth your investment generated. You can spend that, no problem. But a return of capital, that's just the investment handing you back your initial cash, bit by bit. If you spend that, you're basically selling off your investment without even knowing it.
Okay, so we've looked at the math, we've looked at the psychology. Let's get back to the big question and lay down the final verdict. Are these payouts creating new wealth, or are they just shuffling money around? Well, the real answer is, it's kind of both.
So, by the book, every payout is technically a redistribution. But, and this is key, it can become real wealth creation if a few things are true. 1, the cash has to come from real actual business profits, not just selling stuff off. 2, if there's a tax break, that can turn it into a real net gain for you. And 3, this is the big one, when you take that cash and immediately reinvest it, buying more assets, well, that's when you kickstart the incredible power of compounding. So, what do you absolutely need to remember from all this? First, these payouts are not free money. The price of your asset will always adjust to reflect it. Second, be super aware of that money illusion trick your brain plays on you. And finally, always ask yourself, is this real profit or am I just getting a refund on my own investment? And that really leaves us with one final powerful idea that should completely change how you look at this stuff. The most important question isn't how much does it pay? The real question is, Where is that money actually coming from?
Hey, if this kind of deep dive is your thing and you want more analysis on big topics like macroeconomics, AI, and tech, you should definitely follow the Macroeconomy on IA channel.
Oh, and make sure you check out the links down in the description. We've put all the details from today's sources there for you. And definitely keep an eye out for our next publication. And of course, we gotta do the disclaimer. Just remember, this is all for educational and informational purposes. It is not investment advice. And as always, what happened in the past is no guarantee of what's gonna happen in the future.